The Canadian economy, already contending with inflation, tariffs, and a cost of living crisis, is also watching a steady and ongoing slump in the housing market.
Average GTA home prices are down 26% from their 2022 peak. Toronto condo sales just hit a 34-year low.
Thousands of condos are left unsold. The Canadian Mortgage and Housing Corporation says about 2,500 new condos are sitting empty in Metro Vancouver. That's double what it was last year.
And if you bought at the wrong time, your mortgage might be worth more than your house. According to the latest data from the Toronto Regional Real Estate Board, benchmark home prices dropped to $942,300 in December 2025. That's the lowest level since January 2021, before the pandemic housing boom even started. Here's what makes this different. Roughly 60% of Canadian mortgage holders are renewing in 2025 and 2026. Many locked in at rates below 2%. Now, they're facing renewals at 4% to 5%. And in some neighborhoods, people are quietly realizing their home is worth less than what they owe. This isn't speculation. Numbers don't lie. Let's break down what just changed in Toronto's housing market and why everyone's watching what happens next. Before we dive into the numbers, 99% of you watching haven't subscribed yet. If you want to stay ahead of what's happening in the housing, subscribe to our channel. The Toronto housing market didn't just cool. It crashed. In December 2025, the average home in the GTA sold for $1,006,735. That's down 5.7% from a year earlier. The benchmark price fell even harder, down 6.3% year over year to $942,300. That marks 7 straight months of declines. Detached homes dropped 6.9% year over year to an average of $1.30 million. Semi-detached homes fell 12.1% to $957,000. And condos, the segment many thought was affordable, dropped 7.9% to $628,029. According to data from WOWA, median prices hit $850,000 in December, down 8.6% from the year before. Sales volume tells the same story. Only 3,697 homes sold in December. And for the full year 2025, total sales dropped 11.2% compared to 2024. Homes are sitting longer too. The average property stayed on the market for 65 days in December 2025, up from 56 days in December 2024. And sellers are getting less than they're asking for. Homes sold for 3% below listing price on average last month. Benjamin Tal, deputy chief economist at CIBC, called the Toronto condo market frozen. Urbanation reported that developers sold only 1,599 new condo units in all of 2025. That's a 60% drop from 2024 and a 95% collapse from the 2021 peak. The market flipped overnight. Everything changed in 48 hours. Here's where it gets messy for homeowners. The Bank of Canada released a report showing that about 60% of all outstanding mortgages in Canada are renewing in 2025 or 2026. That's roughly 1.2 million loans. Most of these mortgages were signed when rates were below 2%. Now, those same homeowners are renewing at 4% to 5%, and some are staring down payment increases of 15% to 20%. According to the Bank of Canada's analysis, mortgage holders with 5-year fixed-rate contracts renewing in 2025 or 2026 face an average payment increase of 15% to 20% compared to their December 2024 payments. For someone with a $500,000 mortgage who locked in at 2.5% back in June 2020, renewing at 4% means monthly payments jump by about $320. Ron Butler, an Ontario-based mortgage broker, went public with a blunt warning. The one thing for sure is that it's going to get worse in Ontario. There is no possibility of better. Data from RateHub showed that homeowners who bought an average-priced home in 2020 could see their monthly payment jump by approximately $424 this summer. That's an annual increase of nearly $5,100. But here's the real problem. Over 35% of renewals in 2025 and 2026 will have loan-to-value ratios above 90%, according to the Canada Mortgage and Housing Corporation. That means if prices drop just 10% to 15%, many of these homeowners could end up underwater, owing more on their mortgage than the home is worth. In Toronto and Vancouver, this isn't theoretical. Prices have already fallen. And for anyone who bought in 2021 or 2022 with a minimal down payment, a small correction could wipe out their equity completely. Mortgage specialists report that many borrowers are locking in short-term, variable rate products, betting that rates will drop further. That's a gamble. If rates stay elevated or climb, those homeowners could face rapid equity erosion and eventual forced sales. The situation got messy fast, and this is only the beginning. Toronto's condo market isn't just slow, it's in full retreat. According to Urbanation, new condo sales in 2025 dropped to their lowest level since 1991. Developers sold only 1,599 units for the entire year. Compare that to the 2021 peak when Toronto's condo market was selling that many units every few weeks. Construction starts collapsed too. Starts fell from 18,950 units in 2023 to just 9,258 in 2024. That's a 51% decline. In Q1 2025, construction starts were down 88% below the 10-year average. Investors walked away. For decades, individual investors fueled Toronto's condo boom, buying pre-construction units years in advance. High interest rates and softening rents turned many of those units into negative cash flow assets. Investors backed off. The numbers from Toronto Regional Real Estate Board show inventory at 7.85 months, the highest level in 5 years. Sean Hildebrand, president of Urbanation, said the market has entered a phase of the downturn that is really starting to wreak havoc. RBC Economics warned that Toronto's sales-to-new listings ratio dropped to 35.5% in some periods, the lowest level since the 2009 recession. TD Economics predicts condo prices will fall an additional 10% in 2025 alone. Royal LePage forecasts Toronto home prices will drop 4.5% year-over-year in 2026. BMO Economics goes further, predicting Canadian housing prices won't surpass 2022 levels until 2029. Agents were shocked. Sellers started panicking. The tone shifted fast. So who's underwater right now? Anyone who bought in Toronto between late 2021 and mid-2022 with less than 10% down is at serious risk. Prices are already down 26% from the peak. If you bought a condo for $700,000 in early 2022 with 5% down, and it's now worth $628,000, you've lost your entire down payment and then some. According to reports, over 35% of investor-owned condo units in downtown Toronto are underwater on cash flow. Mortgage delinquencies, while still low nationally at 0.22%, have started rising in outer 905 markets like Milton, Barrie, and Oshawa. Victor Couture, an associate professor at the University of Toronto, told CTV News that while we're not currently in a housing crash, prices aren't expected to rise significantly in 2026 without rapid population growth, very low interest rates, or strong economic growth. None of those things are happening right now. Canada's unemployment rate hit 6.8% in December 2025. Job creation is weak. Immigration targets have been slashed from 485,000 to 365,000 by 2027. Trade tensions with the U.S. are weighing on economic confidence. Jason Mercer, Chief Information Officer at the Toronto Regional Real Estate Board, said it clearly. Households must be confident in their employment situation before committing to long-term monthly mortgage payments. Right now, confidence is gone, and that's why homeowners, renters, and investors are all on edge right now. The market is shifting faster than anyone expected. Prices are falling, mortgage renewals are hitting hard, and for some buyers who jumped in during the boom, their biggest investment might be worth less than what they owe. If this is the warning sign, bigger trouble could be next. Everyone's watching what happens in the first half of 2026. Because what happens in Toronto doesn't stay in Toronto, it sets the tone for housing markets across Canada. The situation is fragile. And no one expected it to fall apart this fast.